Hey, ladies and gentlemen, welcome back. Welcome back. Welcome back. We are live today on Saturday, the 18th of July. Good afternoon and welcome back to the channel, people. Been away for a while. I know that. I know that. I know that. Been doing a couple things in real life. Had to set up a couple things. That took me a lot of energy and a lot of time over the past couple of weeks. So I'm excited to talk to you guys about that. It's not mining related at all, but you know, it is a couple things that kept me busy over the last couple of weeks. And that made it so that I didn't really have that much time to look at all of these gold and silver mining stocks and to look at the market action. So today I am just going to take my time and we are going to, first of all, create a post to make everybody well aware that we're live. And after that, we're just going to look at the market action from the past couple days, couple weeks, see what happens, where we are now, if things have really changed all that much, and you know, where we're going from here. Who knows? Let me just create two posts and then I will be right with you guys. All right. All right. I'm all ready. I'm all set. How have you guys been? You know, it's been a couple weeks. Haven't done a stream for, I think, since the Mark Levy interview, right? That's a couple weeks ago now, 2-3 weeks. How have you guys been? You know, a lot of things have happened. I haven't been on social media much, so I don't know who is bombing who at the moment. I don't know what countries are at war. You know, there's a lot of things to catch up on today. But from what I've seen in the gold and silver market, things have not been looking good for us, huh? The last couple weeks. How have you guys been? What's been going on? What's been happening? Set some things up here. There we go. There we go. There we go. Yeah, man. Some couple very cool things happened in my real life. You know, this is a channel where we talk about gold and silver, but at the end of the day, right? I just want to share some things about my own personal life too. I recently got invited into a YouTube like membership program. That was a lot of fun. We had a couple meetings online on how to how to build a YouTube channel and how to do things with YouTube memberships. That is something that I definitely want to explore in the future. It was a lot of fun. I got invited. It was a membership community with about 180 people. YouTube organized it themselves. And they talked about how to use memberships on your channel, which sounded very interesting, right? I got my memberships on Buy Me a Coffee right now, but that is a whole separate thing, and so I'm thinking about moving all of that over to YouTube with the memberships. And then let me just take a couple minutes to let people join, and then we're gonna dive into the gold and silver stories. But yeah, last couple weeks, man, I've been working pretty hard, right? I've got a full-time job besides this. Recently moved to Belgium from the Netherlands, and I've had to do a lot of paperwork, right? So the last, I think 2 or 3 months, I've just been hustling paperwork back and forth, going to government agencies, right, with a stack of papers, then being sent home because I'm missing one of them, right, getting that one more paper and then going back to the government agencies. It's been a lot of, back and forth with a lot of people. It's been pretty tiring, I do have to say that. And besides that, I've been getting into another form of business. And that is pretty exciting for me personally. So one of the bigger reasons, right, that I moved from the Netherlands to Belgium was that it's a lot more attractive to run your own business in Belgium than it is in the Netherlands, right, tax-wise. And recently, I finally made the move to set up my own company, right? So I've got my full-time job on the one hand, I've got this YouTube channel on the other hand. And on top of that, right now, I'm also a business owner, right? I made my own first business. I give advice in the healthcare sector, right? For people who are interested in that. I don't think so, but just for you to know. And so I've been doing a lot of things with that the last couple weeks. Landed my first contract as well. So very grateful that that is happening. But yeah, it's been quite busy. So I haven't really been paying all that much attention to gold and silver, which really is going to be the topic of today's stream because in this market, right? I've been in this market since let's say 2019, just before COVID. In this market, you do really need patience, right? And I hear a lot of people talk about patience over and over again, how important it is in investing to be patient. But it's only recently that I really understood what patience actually means in investing, right? So I want to talk about that a little bit later. But first, of course, we want to know, right, what's the money doing at the moment? What is the big money doing? So let's look at these charts. Gold and silver. I know a lot of things happened. I know that silver crashed down to 55 bucks. I know that gold is back right here at 4,000. And, I've seen, let me just show you guys one post that I've seen on Twitter that I thought was really interesting. It's, let me see, it's this post right here. Let me just make this bigger. So these are a couple of the gold charts, right, compared to other bull markets in history. And I thought that this was really interesting. So these are a couple different charts with different time frames, different periods. Let me just put that in screen for you guys. So the orange line in this setup is the bull market we have today, right? Where we started at a certain price, then we peaked towards about 5,000, and now we've come back to like 4,000. So you can see that it's pretty small. And if you compare that to the bull market in the 1970s, right, they would have guessed that we have a long way to go. But these comparisons are not really all that nice. Because if we look at this one, right, this is the 2000s bull market. You can see that the blue and the yellow line in this one is the bull market in the year 2000, right? You can see that they kind of track pretty much alongside each other, where there was a steady but slow rise from, in this case, 2016, all the way to the first stop about 10 years into the bull market, and then a pretty hefty correction after that. Well, I personally believe that this is not the end of the bull market yet, but there is one chart in this set of charts that is really, really convincing that says otherwise. So if this comparison is true, right, if the bull market we are in right now is like the bull market from 1999 till 2011, right, if this is sort of a bull market based on some form of financial crisis that is to come, which a lot of people think there is, then we can expect this correction that we're in right now to be the correction that happened around 2006-ish. And if you've read, or if you've read, nobody reads anything. If you've heard or listened to the interview with Mark Levy about a couple of weeks ago, you know that after that crash, the market really went up from, let's say, 2008 till 2011, right? This is what I think is going on in this market at the moment. But if you put this bull market, right, that we have right now on the 1970s bull market, you get a picture right here that could say, oh, maybe we have peaked right now. I thought that this image was very striking, honestly. That's why I reposted it on my Twitter. Because you can see that the orange line in this one is the bull market that we've been in right now since the year 2000, right? And the yellow line in this one is the bull market in the 1970s. And you can see that they track really well, And what happened after the year 1970, after it peaked? Well, gold just collapsed back. And let me just go back to the 1970s on this chart. The 1970s, wait, this is way too slow. The 1970s right here. Right, they say with that image that the gold bull market that we're in right now kind of looks like this, with some form of an eccentric, some form of a top that happened. And afterwards, right, the gold price collapsed, let's say about 66% from that. So that would mean that the bull market is definitely over if we compare it to the 1970s. Unfortunately, for a lot of people, unfortunate. But if we compare it to 2008 in that same set of pictures, right? There would still be another top after this. And that is personally what I still believe, right? Because I've been away for 3 weeks now. I haven't looked at the charts, but when I got back to my computer, things were still the same, right? The story in general is still the same. There is still a massive bubble in the tech industry. There's still a massive bubble in debt. Government debt is still rising. Inflation is still there. All of these things haven't gone away, and gold is still not money, right? We still have a problem with money. Hey Simba, good to see you, man. Welcome back. It's been a while. Good to see that you're still around. But yeah, it's been 3 weeks. Nothing has changed in my view. Honestly, there's still a big bubble, right? We still have AI bubbles. We still have debt bubbles. We still have currency debasement that's going on rapidly. So nothing really changed. And I think that should be what's on the top of your mind at the moment. Nothing really changed, right? If we go and look at, I kind of wanted to look at this because I haven't looked at this for a while. This is SpaceX, you know, when I went away, the stock was trading at about, like, let's call it 210. Right now it's trading at, let's say, about 40% less than that. But it still is a $1.6 trillion company. There is still a bubble going on. Tesla is still worth $1.4 trillion, right? Nvidia is still worth $4.9 trillion. All these AI companies are still here, right? All of this debt is still here. All of this currency debasement is still here. Nothing really went away in the last 3 weeks, right? So is the bull market in gold and silver over? No, definitely not. At least, you know, that's what I think. But we have gone through a couple very important levels, right? Gold is back at 4,000. So we are just going to delete all of these lines because we thought, right, that this was some line of support. Clearly, we've gone below that. Unfortunate. now we are sitting in this support zone right here, where around 4,000, right? There's been some trading activity in October 2025. It's got above that, it's got back down. It acted as a support zone here in October. And from that, we went up in sort of like a very wild peaking top event right there, which kind of marked the end of this, for this, right, phase of the bull market. And afterwards, right now, we've been in a correction for about 100, let's call it, what's that, from January until June, for about 6 months now. We've been in this correction. And we've corrected, at the moment, from peak to bottom, about 29%. That is roughly in line with a whole financial crisis, right? Because 29% drawdown here. If we go back to 2008 and we look at the drawdown that we had, right, from there, from this peak, right there, till the bottom there, you can see that the drawdown was about 44%, right, after the bull market peaked in 2011 till the bottom in 2015. Within the peak in 2008, right, the financial crash that happened, there was a correction of about 33%. So the correction that we've seen right now in the price of gold is about as much, right, or is about as deep and as sharp as it was in 2008. The correction there lasted roughly 8 months, right? So the correction lasted a little bit longer and it's gone roughly as deep. So right now, the last couple months in the gold market, we've experienced a slowdown, right? A correction as big and as sharp as the correction in 2008. And, you know, everybody knows what happened then. Well, the question, of course, is where do we go from here? Where do we go from here? There is a pretty clear next support zone, right, that we can all see in this chart. And I am not a very well-versed technician with these charts, right? I don't really like doing this. I like to philosophize a lot more than I like to look at charts, because I do think that these things are pretty vulnerable to manipulation. And, you know, I don't really believe that you can project the future based on some chart somewhere. But, what I think doesn't matter. A lot of people think that these levels matter, so they do. Unfortunately, that's just how it works. This zone right here, right, around $32 to $3,300 is a very big support zone. Why? Because a lot of trading activity has happened in that zone when it first entered there during April all the way until August. So that's about half a year of trading that happened within the $3,300 level. So why is that a support zone? That's a support zone because a lot of people bought and sold their gold there. So if gold gets back to that level, some people are going to think, oh, gold is back to this level. It was, right? It was 60% higher from here the last time I checked. Now it's back at my level. Now I can add some more, right? Other people are going to be thinking, damn, I bought some gold at 3,300. It got all the way to 5,500, and now it's back to my sell or to my buy price. This thing hasn't done anything, so I need to sell some. So there will be a discussion between buyers and sellers that happens at this price, because a lot of people have bought and have sold there already. And that's why those levels are, you know, that's why people look at those levels as important levels. But that is 16% lower than where we are today, which would mean that from the top, right, we are down about 28% right now, which is the 2008 correction. And if we go back to $3,300 gold, that would mean that we have a 40% correction, which is about as big as a correction as the end of the bull market in 2011, with the blow off top, with the retail speculation that happened then, with all the you know, lots of companies that got bought and sold during that time. So we are looking right now at a very important question, which is, has the bull market ended in 2016 January? Or is there another leg to come? Well, that question really hangs on what happens in the next couple months. Because if we see gold, right, move lower from here towards the $3,300 level, that would mean that the bull market might be over. That would mean that it might take longer before you make more money on your gold and silver. Because, right, if we look back at this 2011 period, right, before gold got back to this level of, 2000, it took gold from 2011 all the way until 2021, which was 10 years to get back to that level. And, unfortunately, if you bought gold there, hoping that there was another lag in the bull market, you had to wait 11 years to make a profit. Is that bad? Well, if you hold physical gold for 11 years, and you have it stacked up like these little coins, right? No, that's not bad. That just means that you have a very good, heavy paperweight for the next 11 years, right? That you can brag about to your friends when they come over to parties. But as an investment, right, it's not really the best investment out there if you have to suffer through this 11-year period, right? But if we are in a more 2008 scenario where this is just the correction that has happened, right, then we can expect another leg up where everybody holding these gold and silver mining stocks will be in big, big profits, right? So that's kind of the gamble that we're in right now. So personally, looking at everything that is going on in the markets right now, right, we got SpaceX that launched, it went public. It's got XAI in there. We got all of these tech giants that are still, buying new chips from NVIDIA, fueling that CapEx. They are issuing debt these days to do it, right? So that tells me that there's some problems already building there. I do believe that we are still within this 2008 scenario where there is a bigger market crash or like a bigger market event that happens at some point, driving everything down. Gold is kind of sniffing that out already, right? And preparing for that, getting cash, getting into liquidity before, things get a lot cheaper and the big money buys the S&P at better prices. But that would mean, right, that we have to suffer through that correction, which we've just done, by the way, which everybody here has done before we get this other bigger lag up afterwards. But, a more interesting point than the price of gold itself and where it might go in the next couple months or couple years is the fact that even if we go down from where we are until the next support zone, right? Even if we have a correction as deep as the correction that happened when the bull market peaked in 2011, right? Even if we have a dramatic market shift, a lot of these gold and silver stocks that are out there are still cheap, even at those levels, right? Even if we go towards another extreme bear market, these gold stocks are still cheap because a lot of these gold stocks out there, right, they have resources that have been built on a gold price of $3,000 gold, $3,500 gold, and they are still cheap at that level, right? Let alone, right, imagine just at $4,000 gold. So sure, gold can go down more, right? We've just had a correction, 30%, right? We're about in a 20 or a 2008 kind of correction at the moment. But all of these stocks, right, they're still cheap. Even if we go down to $3,300, gold, and these gold stocks are still cheap, so it's not really something that concerns me all that much. It's not something that concerns me at all, to be honest. I sleep very well knowing that, what is it now? For sure, 95% of my net worth is in these gold and silver stocks. I sleep very well at night, even though gold has crashed 30%. Because I know, like, all of these stocks, they're still cheap. And I know that I keep saying that over and over on this stream, but that is really what I believe. It's just about waiting at this point. It's just about being patient. And that is something that I wanted to talk about a little bit more today, because I feel like we live in a very impatient world where people just want to have some gratification right away, right? We've had a move in gold, the most unprecedented move ever, right? From about 1800, about 1800 to 5,500. That move took us, let's say, 2 years, right? Yeah, exactly 2 years. But that isn't fast enough for people because they don't see their stocks fly up as quickly, right? And then, people get worried. Did I buy the wrong thing? Is it over? Should I be invested in something else? I see all of these other things in the market doing extremely well, but these stupid gold and silver stocks, they're not doing anything. Even though if we just look at it with a very clear view, we can see that a lot of these gold stocks are cheap. Are they risk-free? No, there's a lot of risk, of course, but, it's a lot of risk for a lot of reward, right? And if you combine those two, you can say, yeah, that's worth the bet that I could take. But the thing is, in this market, it's just a lot of waiting that you have to do. And the annoying thing about patience, right? And the annoying thing about having to wait for something that you don't know when it's going to come or if it's going to come at all, right? Or the constant doubts that you have and the constant conversations that you need to have with yourself, right? Because I was in this market, right, from, let's say, 2019 there-ish all the way until now. Let me just put it on a weekly time frame. And a lot of this time in this market, right, I could have told myself, looking at the charts, like, hey man, I've just been wrong. I was wrong about this trade. I haven't made any money. Actually, I'm down 60% of my investment. I'm probably just wrong. I need to quit. But the thing about patience and the thing about waiting is that you have to have some sort of, some form of faith that you need to have within your own analysis to be able to hang on. Because right back in, let's say, 2020, right, everybody knew that all of these stocks were super cheap, just like now. And a lot of people bought gold stocks, silver stocks, imagining the gold price to keep shooting up, right? Because what did we see in 2020, right? The government shut down the entire economy. They started printing a whole bunch of cash. Inflation started to go up. But before that, before inflation started to go up, people got rich, right? A lot of people had the most money they've ever had in their entire lives during COVID, during 2020, because of all the stimulus that got out there. A lot of that stimulus, right, went into crypto right away. A lot of people would think that it would have gone into gold, but it got into crypto. So during this time, right, during this period, from March till August, a lot of these gold stocks and gold itself, they went up pretty quickly. But we saw crypto going up exponentially more than gold did. And those gold stocks did at that time. But, I knew these gold stocks, they're cheap, right? They got good resources. They're actually real. They have a tangible value. And this crypto shit is just speculation. And it's just, it's a fugazi. It's fairy dust, as they say. But after that period, right, I've had to suffer through a pretty long bear market within this gold. Well, pretty long is it's not a real term, because for some people it's long, for some people it's short. It definitely felt long to me, right? I was 20 something at the time, and having to wait 4 years for something that you don't know for sure is going to happen, but that you think is going to happen in the future is a long time, right? That was a long time for me, and my patience really got tested, right? Because there's a difference between patience and waiting, as I have learned, where it's pretty easy to wait for something, right? You can go outside, and if you have to wait for the bus to get there, or more in American terms, if you have to wait for your plane to come, let's say, you're at the airport and you're waiting to be called. It's pretty easy to wait because you just have to sit there and you're kind of just waiting for a event to happen in the future. But at that point, right, you can kind of forget it and go do something else, right? You're on your phone, you're just thinking about something else, and then the bus comes or you get called or whatever. That's not really what patience is, right? Patience is a more active act that you do, right? Because during this part of the bull market in 2020, I knew that these stocks that I had were cheap, right? I was doing my research, I was getting very deep into this, and I understood, right, all of these resources, they were profitable at $1,600 gold. They are going to be making them, they're going to be building them. So at $2,000 gold, they are going to be very much in the profit. So the price should rise, but the price didn't rise, and the gold price got lower. Right? I was waiting, being patient for, let's say, about 2 years, and the gold price has done nothing. And then all of a sudden, right, around March 2022, the gold price just really fell pretty hard, right? It got below even, right, the COVID lows. And during that time, it was, I gotta say, for me personally, I was buying a lot of my stocks during this period right here. This is where I put in the biggest chunk of my investment, because I knew that the things that I had were cheap and they were getting cheaper. But I was kind of making a bet, because a lot of people thought that this drawdown, right, that this peak that we had right there and this drawdown of about 22% was the end of the bull market. But it was just a short term, or well, a couple month long correction. But I had to be patient at that time, right? I had to keep looking at the market. I had to keep checking in. I had to keep reminding myself that what I had was valuable. And, I had to keep reminding myself why I owned these gold and silver stocks. Because the difference between waiting and being patient is that with patience, you really gotta remind yourself about what you're doing. I am waiting for these gold and silver stocks to revalue to the price where I think they should be at, which is about roughly 10 to 15% of their buyout value, which I talk about in a lot of my videos. That is just a metric that I use myself to know and to have a gauge on whether or not something is cheap or expensive. I might be wrong with that metric, but it's just all I got at the moment, right? But I have to keep reminding myself about that fact, because if I just look at the price, if I just look at the price action, I get lost inside my own head and I get lost in the actual value of the things that I'm holding. But I have to keep reminding myself, and that's part of being patient in this market, right? It's seeing the price action, understanding what's going on, and then reminding yourself, okay, I hold these stocks because of this reason. And that also really connects well to another point. It's if you can't name a couple reasons for yourself on why you hold a certain stock, right, then you need to do more research. It needs to be clearer for yourself. Because if you lose that reason for yourself why you own something, then it's pretty easy to get caught up in the daily moves, right? It's pretty easy to get caught up in this 22% correction and sell because the price has gone down and you don't know why you own it. You forgot, right? You're doing something else at the moment and you're thinking, these gold and silver stocks, they haven't done anything. I'm just waiting for them to go up. And if they go up, I'm just going to sell. So I'm not going to pay any attention anymore. I'm just going to wait. Well, next thing you know, right, all of your investments are down 40%. Now what, right? Now you've waited. Now you're wrong. Now what? Now you're going to sell. And if I did that, right, if I stop being patient, right, if I stop paying attention to all of these gold and silver stocks and this price and everything that was going on, I would have probably sold along the way, right? I would have probably sold within this correction. But what happened afterwards, right, was that this was the last correction that happened before the price absolutely shot through the roof. And then you can say, yeah, but you didn't knew that it was going up afterwards. Well, but I knew that everything that I was holding had value. And I knew that why I was holding it was because at some point they were going to be revalued. Just like gold, just like silver, and just like these mining stocks. But, you know, I learned a lot about patience, and unfortunately, I wish that I was better at explaining it in words, but maybe that happens in the future, you know, when I do these streams a lot more. But it's there's a big difference between waiting and being patient, right? And that's why I keep reminding myself about this correction that we're in. I keep reminding myself about the value of these gold and silver stocks, even though, right, I started a new business, even though I got a full-time job, even though I got all of these other things on my mind all day, I have to keep reminding myself, like, okay, gold is still pretty cheap if we look at the general equity markets. Silver is pretty cheap if we compare it to gold. Gold stocks are pretty cheap if we compare it to gold itself. So that means that gold stocks are relatively cheap right now, which means that they are, you know, worth buying, worth owning, and worth being patient about. But that is something completely different than just buying them, forgetting about them, and then seeing next year what happened. If you do that, you might get blindsided, right? You lose track of the longer term vision that you need to have to be able to, you know, hold on to this market, honestly. Anyway, you know, that being said, I'm down 50% this year. So all that waiting and all that patience. On the other hand, you know, I've just been wrong, you know, all year, if you ask some people. But it is what it is, I guess. So where can we go with the price of gold? We can go lower, right? There is a real possibility that we go back to this $3,300 level. And that means that the bull market is over, ladies and gentlemen. I hope you had a good ride. I hope you had a lot of fun. It's back to the coal mines for all of us, you know? That would also mean that it probably takes a couple years before gold goes back to the old highs, right? If we look at 2011, it took 10 years. If we look at the 1970s, it took whatever, you know, 20, 30 years, whatever, right? A long time. Nobody wants that. But there is also a real possibility that this might be the end of the correction if we look at the example from 2008. If we then look, right, if we go and move over one scale to the price of silver, let's just see what happened over there, right? We kind of drew a couple things a while back. So let's just look at those, right? We had this ascending trend line where the price of silver bounced a couple times on this line, right? Creating some form of a support zone, right? It's a zone where people buy and people sell. So it's an interesting area for people. Honestly, most of these zones get created by computer algorithms, right? CTAs. But leaving that aside, these were pretty interesting zones. We slammed down towards this support line. We broke down and we touched this support line where the price of silver touched there, it touched there, it touched there, and it's touched there. All of these moves go towards this box. And this box is really a kind of a bigger zone in October till November 2025, about the $50 zone. For the people who have forgotten, right? $50 used to be, can't even put it on the weekly chart. Wait, the monthly chart, right? $50 used to be the all-time high zone. So, right? It's pretty ugly to show it like this, but I guess that you guys understand. Right? $50 used to be the all-time high in the 1980s, and then in 2011 it got to $50 as well. So $50 is a very historic level for silver. And given the fact that a lot of people in the silver market are pretty gray and old, it is a level that a lot of people will probably remember. And that is why it is now acting as a sort of a support zone, hopefully, when we get back to it. Right, silver is about 55 right now. I expect it to get into this zone, right? I expect it to break 50, and I, expect it to linger around in this zone for a little bit. That would mean that a lot of people get pretty depressed. That would mean that a lot of people have bought silver, right, in this breakout right there, thinking that, oh, finally the suppression in the price of silver has ended. Finally, the COMEX cartel was done manipulating the price lower, right? I'm going to buy because silver is going to 600 next week, right? No patience, right? No clear guidance on what can happen in the world, right? Where we are in this kind of market. What happened? They lost 50% of their money. Welcome to the gold and silver market. I hope you have a good time. This is just what happens, right? The price moves up, people get very excited. Afterwards, the price slams down, people get pretty depressed, right? It wouldn't surprise me, actually, if we, with silver, go below these lowest lows right there. Because that's something that happens pretty often in the silver market, I feel like, where you have a pretty set support structure with a lot of people looking at it and a lot of people pretty frantic about it. And then they love to like get the price below that for a little bit, getting everybody scared, getting everybody out, right? Making everybody emotional before pumping it back up. I don't know why that is, but that's just something that I've noticed in the last couple of years. Anyway, price of silver down about 50% at the moment. If we look, right, if we go back to, let's say, right, the same amount as we looked at for gold. If we look at the bull market that happened, right, from the year 2000 all the way till 2008, I'm sorry. Silver went up a whole bunch, right? And then it had its first real correction where it went down about 57%. Let's call it 58. I don't really care about details like that, but it went down roughly 58, 60, whatever you want to make it percent. So right now, we have experienced a correction just as big as the 2008 correction for both gold and silver, right? So congratulations, first of all, we've made it through another one, which means, right, that from this point, the risk reward is towards the upside, because this is a very cyclical market, right, where the prices go up and the prices go down. So we've seen the price go up, now we've seen the price go down, right? So the next thing that happens after that is, the price goes down more, and then it goes up. But the crash in 2008, right, it was about as big as we've just experienced. Afterwards, right, we had a pretty long period of what you would call just a consolidation, right, from March 2008 till August 2010, which is about 2.5 years before the price of silver went up again for a couple 100%. So given that setup, right, given that market setup, that would mean that the price of silver could spend, 2.5 years between 50 and 100 right now before going up from there. And I do think that that's what we need to expect, right? I think that needs to be the base case. Silver can go down more, but the base case at this point is just a very long consolidation, because a lot of things still need to happen, people, before we can get to the promised land, right? What these gold and silver bugs always talk about. A lot of things still need to happen. Inflation needs to go back up, right? The bond market needs to really get another good crack. Something needs to happen with these interest rates at the Fed. All of this speculation in AI still needs to die. Crypto still needs to fade. The general equity markets still need to shed off a lot of their value, right? A lot of things are still set to happen in the next couple of years. And if we are going to be invested in gold and silver, we have to understand that you have gold and silver not for the immediate future, right? You don't own gold because you think it's going to go up in the next year, but you own gold because you understand, like, okay, we have a global financial system that is based on the dollar. And America as a country and as an empire is kind of fading, right? China is on the rise. China owns a lot of the gold. China has been getting gold away from America and away from these Western countries for, let's call it 10 years now. Eventually, the government debt of America is going to catch up to its paychecks, and they are not going to be able to service all of that debt. And at that point, real problems start to emerge. That's when you want to have your gold and silver. That's when you want to have your gold and silver mining stocks. That is going to take another 10 years before all of that stuff is done happening, right? So in that time frame, who cares what is going to happen over the next couple years? Well, you got to keep reminding yourself about that, because if you forget that, right, it's very easy to get caught up in a 20 to 30% correction and then sell, when the real game that you're playing is really the end game, right? It's the changing of empires, in essence. Some people are in this market as well because they just want to make some money tomorrow, but that's not me. I'm in here for the long-term game that is playing out right now, right? The power struggle between these countries that is very clearly in the East's is its favor. And all of these Eastern countries have been stacking up on gold. They do that, of course, for a very specific reason. Because gold always wins in these scenarios, but they play out over decades. And we're just, caught in the middle of that, trying to make it and trying to hold on to these stocks and to this physical gold and silver until, all of that stuff happens. Anyway, silver has gone down about 50%, which is about as much as happened in the 2008 crash. So I believe that there's a little bit more downside in silver just because they like it. And I wanted to look at the crash, or the downturn in 2011 as well, right? To have a sort of a conceptual idea of how much silver could go down. So in 2011, right, when the gold market and the silver market peaked, silver was at $50. Silver went down about 71%. Whoosh. So here you can see this is a very clear example of why gold is considered a more safe investment than silver, right? At the end of the last bull market in gold, it dropped about 40% and silver dropped 70%. Right? So I will leave this up to you, right? But if you think that we are somewhere around a historic 2008 kind of level, right, we should go down to about $50. But if you think that we are experiencing something closer to 2011, where the gold market has peaked and we are going into a 10-year-long sideways consolidation for gold and silver, then silver could go down back to $30 to get some historic precedent. I don't think both of those numbers, right, $3,300 gold and $30 silver, I don't think that those are bad numbers. Why don't I think that? Because a lot of these gold stocks, right, a lot of these silver stories, they have resources that are based on those kind of levels, right? And in those resources, based on those kind of levels, they have economics that make sense. So this is a very unique time in this market, I feel like, because when I look, right, I'm not that old, right? Let's just get that out of the way. I have never built a mine myself. Let's just get that out of the way as well. I'm just a guy on the internet. I'm looking at gold and silver stocks and I do a lot of research. In my research, right, it's always been that when you get into these very risky markets, right, gold and silver mining, exploration, it's a very risky business. You have to take a certain amount of risk, right? If you were to invest in gold and silver miners, or let's call it gold miners, during, let's say, this period, right? During this period from, let's call it 2020 till 2024, you had a lot of these stocks out there that had resources that made sense at about $1,800 gold. So that means that you have about a 10 to 15% return over, let's say, 10-year mine life, which is a pretty decent return, right? If you can compound your money for 15 or for 10 years at 15%, you're going to have a lot of money, right? Especially if a project costs $300 million to start with, right? You're going to be compounding a lot of money. But, right, you had to take some form of a calculated risk there. Because you buy these stocks not because they make so much money at $1,800 gold. You buy them because you think the price of gold is going to rise in the future and these stocks are going to make more money in the future, right? That's the primary reason why you would buy gold and silver stocks in this area. And I did that because I thought gold is going to go up for sure in the future. Well, gold has now gone up, and all of these gold and silver stocks, they are still lingering. They are still behind. They are still not catching up to the actual gold price itself. Partly because gold is in a correction and people are very depressed and sad about that. But also partly because a lot of money is still locked up in other ventures. Call it SpaceX, call it crypto, all of these kind of bullshit things that are happening right now. Right now, you can buy these gold and silver stocks, right? And you don't even have to speculate on the price of gold. Because in the worst case scenario, we go back to about $3,300 gold, and all of these gold stocks are still extremely profitable. I see gold stocks, I see silver stocks with projects out there that have 100% rates of return, right? Payback periods of 2 years. If they get, if gold is going to stay at $3,300 for 10 years, they just have to make that mine and start mining. And then, you're going to be very fucking wealthy at the end of it, right? It's a no-brainer. AJ Walsh, good to see you again, man. Glad to see that everybody's still around after 3 weeks. I'm sorry, guys. This is my vacation, right? This is my vacation this year. I got myself a new business, right? I did my full-time work, employment. Couldn't do much YouTube. Very sorry about that. Good to see that you guys are still around. But AJ Walsh, what isn't usually mentioned, China and India citizens buy gold due to their lack of trust in their nation's currency. More impact on precious metals pricing than anything in the West. Well, yeah. And imagine if that is going to happen with the American society and the West in general as well. When we are losing faith in the US dollar, right? When we are losing faith in the euro. That is why, right? And that is when you want to hold this physical gold, right? But there's a part physical gold and there's a part that just wants to make money, right? So it's always kind of a, talking about gold and gold investing, right? It's always a story with two sides to it, right? Because in one sense, you want to invest in gold because you want to give it to your grandkids, basically, right? You just want to have a paperweight that looks shiny that you give to the next generation because you know it's going to make money over the long run and it's going to hold its value, right? But at the other side, there's a little greedy piece of me that just want to maximize on this opportunity as much as possible. And that side of me wants to get into these gold and silver mining stocks, right? Because there's leverage there. There's a disbalance between the price and the value, right? But I just need patience to get that. And patience, as I just talked about, is a lot different than waiting, because, you know, if you wait, you kind of forget the story. And if you forget the story, it's very easy to get emotional about that. And talking about that, let's just look at what these gold and silver stocks have done, because god damn, have I lost a lot of money, huh? I've been away for 3 weeks, I come back, I'm down like 20%. Like, what happened? What happened, huh? So this is the price of GDX. GDX is the bigger gold mining ETF, which doesn't mean anything because the name is kind of misplaced. There's a lot of silver miners in this as well. There's a lot of royalty companies here as well. So it's just a basket of stocks, of the biggest stocks in this industry. We peaked at 117. We got down about 40% to 70 bucks. And we have drawn a couple things over the last couple months. This ascending line, wait, this is, hold up. All right. This line, right? Let me see if I can make this, get this view better. Yep, there we go. All right. So we had a line, right? And this price kind of hugged this line for a while. Then it got up, it got back to it, and it broke down. After it broke down, we drew these two boxes. And I do want to go back to the daily time frame for that. We drew this box because there has been a lot of activity that's been happening around this 70 euro or $70 zone. We are back there right now. That is something that I've expected to happen. Matter of fact, if we look at gold, right, and if we look at silver, they very clearly signal in the charts that they do want to go down, unfortunately. And that means that the price of the GDX is going to go down as well. From this point, right, to the next support zone is another 25% decrease. Unfortunately, we have to prepare ourselves mentally to take this on the chin and to live with this loss for a long time before the next move up is going to come. That is just how this market works. Things can also just go the other way, of course. That's the beauty of my analysis, right? Things can go up, but they can also go down, and vice versa. No one really knows. But this is also a thing that I wanted to talk about. There's a very big difference, right, between buying the GDX and buying a index and buying an individual mining company. The difference is actually smaller when I think about it now, but when you buy a basket of mining companies, right, there's a bunch of companies in there that actually have profits and that are no longer diluting you as a shareholder. And one thing in this market is that is very unfortunate is the fact that a lot of these companies are diluting their shareholders. Just by the nature of their operations, right? A exploration company has to dilute its shareholders in order to gain money, right? They have to sell shares to get money, to put it into the ground, to get a resource, to hopefully prove that there is something valuable there. They have to do that. That's the nature of their operations. Unfortunately, if you are going to wait for 5, 6, 7 years, unfortunately, that means that there is going to be a lot of dilution. And that really dampens your potential profit in the end, right? So that is something that I always look at when I'm looking at companies. It's like, what is the dilution rate like? Because if we are going to go into a 2008 scenario, right? If we are in a 2008 scenario right now, that would mean that we had the biggest part of the correction. That would also mean that we are going to go resume this bull market soon, which means that the prices are going to go up. dilution has no effect in a upwards market because, the price movement outruns the dilution and you are still going to be making money. But if we are right now in a 2011 type market, where we've had the peak, the most recent peak, and we have to wait for an extended period of time before the price of gold goes up again, right? That would mean that dilution is a real danger to your portfolio. Because if somebody dilutes you for 10% over, right, 5 years, eventually dilution, right, compounds just like interest does. So over 5 years, you're probably diluted out of more than 70% of your position. So then the stock has to go up exponentially more for you to even make money. And that is the unfortunate part of it. We can go more into this in another time. I think it's very important to understand. But you have less of that risk when you are in, when you are in producers, royalty companies, and bigger exploration companies with better ways of making good deals. My apologies, there's a sneeze button on this mic. I didn't use it. The false bottom lifestyle. Hey yo, bro. That's a crazy name. How do you come up with that username? That's a crazy one. The false bottom lifestyle says, dilution is a real problem. I like stories that are building their mines from their own cash flow. Companies like, yeah, I like that too. My favorite type of flavor in this market, right? My favorite type of ice cream is definitely producers. But, right, I like producers that have some assets that they are also building out. So developers. Developers are my favorite part right now. Because there is going to come a day where I can write the Lassonde curve. Oh my god. I did it. I'm not a robot. Now show me the Lassonde curve. There's going to come a day where I write this word properly. Right away. So the reason I like developers, right, is that developers are really in this part of the Lassonde curve, right? So for the people new to this market, if there are any at the moment, right? I feel like a lot of people watching right now have been in this market for a long time, right? Because it's been going down for a while. A lot of the new people, they've left already. They're doing something else at the moment. But for the people who are new to this market, this is the Lassonde curve. The Lassonde curve is a general indication of the value of a mining project over its life over time. So you start with the concept phase, where you just have a piece of land with no drilling in there. But you think to yourself, right, there might be some gold and silver in here based on these kind of criterias. So I'm just going to dig and I'm going to drill holes. I'm going to bring some money in from investors. So I'm going to dilute my investors and put some money into this piece of land. Then there might be a potential discovery. And then the price rises, right? Because a potential discovery is worth more than just a piece of farmland, so the price rises. Up until there's a discovery, right? That's when the price temporarily peaks. The value of something temporarily peaks. I'm sorry, the price and the value are not the same. But now you know that there is some valuable resources there. And then this is the most exciting part, right, in a mining story. This is when drill results come out, people get very hyped up about the story, and then eventually that peaks when we have a discovery. And then after that discovery, we get into a very boring period. We get into the nitty-gritty of it. We gotta do the analysis. We gotta do the bird studies. We gotta do the water studies. We gotta do the engineering. We gotta do the people management. We gotta get the permits. We gotta get all that stuff. And that tanks the price because that's a lot of costs that you have to put into something. And it's very boring work that nobody wants to see, honestly. But after that, right, the development starts. That's when you get the last permits. That's when you start to move some objects. That's when you eventually build a mine, right? And the most valuable point in any mine is the first day of construction or the first day of production, because that's when you are going to make money, but you also have the most gold still on your balance sheet. I like stories that are in this part of the Lassane curve, into this development part, especially right now with high gold prices and generally low stock prices. I like them. Acosti 46 says, hoping 2026 is just a blip on a longer term bullish chart where gold is valued way higher with a weakening economy, increased debt, money printing not stopping. Yeah, I honestly, I do believe that everything we are looking at right now will be eventually a blip on the market, right? A blip on the chart. I do believe that the prices eventually are going to get higher. But the question is, right, is that going to be at the end of 2026? Is that going to be at the end of 2027? Is that going to be at the end of 2028? Right? It's probably going to take longer than you think right now. And that is the unfortunate part about it. But that doesn't mean that your analysis is wrong, right? That doesn't mean that your views on gold, on silver, on these, these stocks that you own, that they're wrong per se. Timing has nothing to do with value in this market, right? But if you're hoping for a strong finish in 2026, I do have to say, don't get discouraged if it doesn't happen, right? Don't get discouraged and think, oh man, I made a mistake because it just didn't happen in 2026. If you put a time frame on your own investing in this market, you are going to be severely disappointed and you are going to be very mad. And you are going to lose a perspective about the future, right? Because it might be that it's not going to happen in 2026, and it's not going to happen in 2027, and it's not going to happen in 2028, but then in 2029, it is when it's happening. Who knows? It might take longer than you expect, and you have to mentally kind of prepare yourself, right, for that. So I can kind of talk about that too, I guess. I can talk about anything. This is my channel. But when I got into this market in 2020, 2019, something like that, I really believed that I found like a ticket, right? I found my Willy Wonka, chocolate factory ticket. That this was like the thing that was going to make me extremely rich, extremely quickly, and the thing that was going to retire me, right? Pretty soon. So I had all these plans for myself, right? I'm going to put this money that I have into all of these stocks. I had a whole bunch of companies that I identified with some help that were really interesting. And I was just buying them during this entire period, right? I was just buying these companies thinking at the end of this year, man, it's gotta happen. All of these stocks are so cheap. I'm going to be up 5x, 7x, 10x by the end of next year. And of course, that didn't happen, right? And I had to wait a little bit longer. And I was severely disappointed because I really thought, right, that my analysis was solid, right? I identified companies that had more value than their price. So they should go up, right? And they should go up quickly because I identified it and it's cheap. And if I can identify it, then the rest of the world can too. So why is this not going up? Why is this so cheap right now? Well, I got severely disappointed over this period of time, right? It took about 5 years. And I had to hold on to all of these stocks, always thinking like, oh, it has to be at the end of this year because it's so cheap and it's been going on for so long. It has to go at the end of this year. And then it didn't happen. And then it didn't happen again. And then I waited another year and then it didn't happen. And then it got to a point, right? Because 4 years, right, for a young adult is a pretty long time. Right? There's a lot of things you can do, but I was kind of preoccupied with waiting for this market to move. I was checking these prices every single day, was looking at these companies every single day. I was really driven by the price of gold and silver because I thought that one day I'm going to wake up and the price of gold is going to be up 10%. And then the price of these stocks are going to be up 100%. And I kept thinking that, but it never happened. And I got really kind of depressed, honestly, within this time frame because it just didn't happen and I didn't understand it. And of course, after 5 years, it eventually happened, right? The price of gold got up. All of these stocks went up, right? But along the way, I kind of switched, right? In about this period right here, 2022, 2023, kind of made a switch for myself. And instead of just waiting on this market to move and to, retire me or to make me a lot of money, I kind of took back the initiative and I just started working on the side, right? I got a high paying job. I started working. Eventually now I started my own company, right? Never thought that I would do that, but here we are. And it's kind of all because I'm still waiting patiently for this market to move, right? But in the meantime, the best thing that you can do is not look at these charts. Honestly, the best thing that you could do is not even watch this stream right now. The best thing that you could do is make more money, right? Is go out, enjoy your life, make a whole bunch of money, and put that money into the market for when eventually, when it does happen, right? You have a bigger base from which the prices can go up. But yeah, Costi, man, if you're just hanging out, waiting for this market to move, you are probably going to get pretty disappointed with this. So, take that into consideration, right? It's going to take longer than you expect. And it's going to take way longer than you expect. Just keep invested because you never know when it's going to happen. And, sometimes I catch myself talking about this stuff and I say, like, when it is going to happen, right? Like it's an event, right? Like we're waiting on some one day that we're going to wake up and everything is going to be different in this market. Well, of course, that's not going to happen, right? It's a process that we're in that just takes years just to play out, right? I always like to look at this, right? So when you look, and this Acosti, this really ties into what you're saying right now. If we look at this bull market, right, from the 2000s all the way until 2011, right? Gold essentially went up in a straight line, basically. So you could have bought something in the year 2000 and just waited for 11 years and you would be a pretty wealthy guy. But during that time, as you say, a lot of blips in the market happened, right? A lot of blips happened. And I really like the Hatchless Horseman and his analysis of all of this because he put it into words, and I really like that. So a lot of these things happen in blips, right? You see that this decline right here, right, is a 25% decline. This decline right here is a 30% decline. This decline right here is a 15% decline. And all of these things on the long time frame look like blips on this chart. But in reality, right, all of these corrections take a long time before they start making money again. So this correction, right, in 2006 took 2 years before the bull market resumed, right? That means that 2 years of your life, you're waking up, you're checking the price of gold on your phone, you're thinking, damn, today is not the day. That sucks. I guess that it's next month. And then, 2 years long, you're going to be extremely disappointed, right? Only for gold to go up and then to go back down again towards that same price, right? And you're in another correction that takes another 2 years in 2008, right? And then afterwards, you're in another correction that takes another 2 years in 2009. So a bull market in general is a very long sequence of corrections. Because if you really look at this, right, the price of gold is steady, then it goes up, then it's steady, then it goes up, then it goes down, right? So if you lost the plot right here, you are selling right before the price goes up. Then it consolidates, right? And then eventually it kind of goes up pretty steep at the end. But there are, in this market, a lot of corrections, and those corrections just take longer than you expect. So if you're waiting for this, and if you're hoping that at the end of the year we have something else going on, you know, try to take a longer time frame, because a year really is nothing in this market. And especially if you're waiting, it's prone to be disappointed. Anyway, we were looking at the GDX. Anyway, we're down 40%. There's a possibility that we go lower from here, right? And there's a possibility that if this is the bottom, that it takes a good 2 years before we get back to the most recent top. So that is just what I want to tell you guys, because that's very important, to me at least. So I wanted to look at some of these ratio charts, because unfortunately, you know, unfortunately, things have not gone the way that I thought that they would. So this is not the chart that I wanted to look at. This is the chart that I wanted to look at. This is the gold divided by the S&P 500. So this chart kind of explains the price of gold compared to the general equity markets. Now, why do I look at this? I look at this because I do believe that gold is cheap compared to the general equity markets. That means on one side that gold is cheap. That means on another side that the general equity market is expensive. Well, why is the general equity market expensive at the moment? There's just a single indicator that can tell me that. That's this old guy, you know, Warren Buffett. He had an indicator for himself, and essentially, right, let's get a good chart of that. Essentially, right, this tells you what fair value is in the market, and this, everything below here is a cheap market, and everything above here is an expensive market. Right now in 2021, sorry, we gotta get a more accurate chart. Yeah, sure. This gets the point across, I guess. So you have a baseline, right, of what is cheap and what is expensive. Everything below this line is kind of cheap, right? And then you saw like 2008 was cheap, 2007 was expensive, 2000 was expensive, and 1999, or well, 2001, or after the crash, it was kind of cheap. But recently, we've been off the charts, expensive in the general equity markets, and we're just moving in that way indefinitely until we see a big change in the world. So on the one hand, right, gold is cheap. On the other hand, the general equity market is extremely expensive, and that makes that this ratio right now is pretty low. If we look at a very long time frame, right, this is a monthly time frame, right? This is the peak of the gold market in the 1970s, 1980s, biggest peak yet. We saw that gold was extremely expensive compared to the general equity markets, but right now, right, we are all the way down in the bottom in this market. This is a big reason why I believe that the gold market has not topped, right? This is a very big indicator with me saying that we are probably not in a 2011 kind of market, right? We've probably not peaked because we've seen in the last peak, and now I'm going to go back to the weekly time frame. In the last peak in 2011, gold, an ounce of gold was worth about 1.5 shares of the S&P. Right now it's worth 1/2 of a share of the S&P. I think that these things will get more aligned when this bull market is over, meaning that this ratio would go back up. And this is a very big part of why I think that this market has not yet peaked, and we are not in a 2011 kind of 10-year long correction, right? We are probably in a 2008, roughly year and a half long correction, which means, Costy, that we have a year left of consolidation. By the way, don't get too stuck up on the end of 2026. But there was this zone, right? There's generally this consolidation zone that we've been in since 2013, right? We've had a peak in 2016. We've tapped the top of the zone. Then we went down to the bottom. And then in 2020, we've hit the top again. We've gone to the bottom. We've been in the bottom for a while. And recently, we've broken out. And this kind of aligned with the $5,500 price tag in the price of gold, right? This also corresponded with a very fat all-time high in my personal portfolio. But after that, right, you make a little bit of money in this market and then you give up half. After that, we've just crashed down, as you can see here, back into this box, right? And we are just here right now. I still expect this ratio to go back up. I still expect to, at least in this bull market, reach these kind of levels right here. So I do still expect that eventually this ratio goes back up. That means that either the general equity markets are going down, or the price of gold is going up, or a combination of the two. Both of them are very good for our holdings. You know, those are very good things to happen to us. Either the gold price is going to go up, or the general equity markets are going to go down. And why is the general equity markets going down good for us, right, as gold and silver investors? It's because then money moves out of general equities. There's a lot of money in there, and it's going to look for another place. Partly that will be gold itself, right, for the safety and the liquidity of it, but partly will also be in speculation surrounding gold and silver, and that's more the stock side of it. AJ Walsh, the S&P is driven by the tech sector. Yep, tech stocks, CAPE ratios, PE ratios, outrageous. A lot of speculation. Yep, for sure. It is, the market is artificially inflated by artificial intelligence. Hey, yo, that's a bar. Yeah, for sure, 100%. There's a big bubble going on in the tech sector. And we're still waiting. Honestly, we're still waiting for that to just collapse, right? And that bubble is partially why this has gone down so sharply. But general idea here is that gold is still cheap compared to general equities. We can see that right here. Then I would like to know, right? I'm invested in gold, but I'm also invested in gold stocks. So I want to know, are gold stocks expensive compared to gold, right? And that is when I look at this chart. This is a chart, the GDX divided by gold, represented as a percentage. You can see that we have been in sort of the same box right here, where we got in 2013, we tapped the top in 2016, we tapped it again in 2020, we got to the bottom, and we tapped it again. And we tapped it again, right, in January 2026. This corresponds with the all-time high in my portfolio, with a lot of excitement in this market. And I, at the time, really believed that this was just going to break out of this box, right? Because the gold to SPX ratio broke out. And I really thought, man, this is the beginning of this bull market, right? This is really the beginning of me at the beach drinking pina coladas all day. But unfortunately, things happened differently because we did not break out of that box, right? We went back down. And this little move back down, killed all the enthusiasm in this entire market, right? It killed all the speculation that people had. It killed all the, bull posting on Twitter. It killed everything. I still believe that before we reach the end of this bull market, we are going to see these kind of levels again. The levels in 2011, or even the levels in 2008, right? Because what we are seeing right now, the amount of speculation, the amount of people invested and caring about the gold and silver stocks is minimal compared to what it was in 2008. I don't know that. I wasn't there in 2008. I have to say that, but I can only look at these charts as sort of a historical comparison. But, I haven't seen the top yet in these charts. And that tells me that we are probably not in a 2011, right, kind of period right now. We are probably more in a 2008 style event where we have a big, sharp correction, kills all the enthusiasm, takes about a year more to get consolidated, and then afterwards, right, the bull market continues. Potentially, right? That's my case that I have right now. Let's see. What other things? Oh yeah, let's look at the gold to silver ratio, just for fun. Right. The gold to silver ratio. Hey Costi, we are having the golden ticket in our hands, waiting patiently with our paper losses. Yeah. Yep. I get, this market is pretty, it's pretty difficult, I have to say, to hold on to, because the first thing that usually happens is that you get a whole bunch of paper losses, right? That happened to me too in the beginning when I got into this market. Right now I'm in profits, but in a lot less profit than I was a couple months ago. But yeah, and you have to be able to hold on to those paper losses, which also means, right, that you got to fix your life, right? And that might sound like a really mean thing to say, but if you get into a position, right, where you, for instance, lose your job, or you have some bills that you are having to pay pretty quickly, right? If you are in a position where you have to sell these stocks, right, at a paper loss, it's going to be pretty difficult, right? So you got to put yourself into a position where you have money, right? Your bills are paid, everything looks well, right? You have a little bit of a cushion in there too, that if you lose anything, right, a job or something, or a car or whatever, right, or something comes along, that you don't have to instantly sell these stocks. Because if this is going to take another 2 years to pan out, right, life isn't gonna wait for you, And you guys are probably hearing this thinking, yeah, what the fuck do you know? You young ass kid. But I'm just sharing. Anyway, gold and silver ratio. This ratio, why do I look at this? I look at this because this explains to me how much speculation there is in this market. Why is that? Because people buy gold because they like the safety of it, right? Who buys gold? Central banks buy gold. Rich people buy gold. Banks buy gold. Governments buy gold, right? Those are the kind of high net worth individuals and institutions that haven't been buying gold over the past couple of years. Silver is more for the retail investor, right? For the small guys, just like me, this is the kind of stuff. And this Chinese panda, this is the kind of stuff that we people buy because we are broke in the grand scheme of things and we want to make a quick buck on our investments. That's why people buy silver. So This is a ratio from gold to silver, right? How many people are buying gold compared to silver? If this ratio is going down, like what happened in 2025 till about January 2026, if this ratio is going down, that means that people are getting more interested in this market. That normal, everyday people are getting more interested in this market, meaning that the speculation goes up. Boom. This bottom right here corresponded with the top in our portfolios, corresponded with the top in the S&P to gold ratio, right? It kind of all aligns to each other. Now, since then, this ratio has gone back to the 66 level, right? Right there. 66 is a very important historic line in this chart. And it's gotten back to that level. It's broken out. It tested it. And now it's going back up. Unfortunately, that means that a lot of speculation is leaving this market. That is just what it is. That means that this ratio is probably going to go back, you know, there's a very fat zone right there of selling and buying. And there's a very fat zone right there. Right, so potentially this ratio in the short term is going to go back up, which means that the price of silver and the price of gold are probably going to go back down, which means that you have to calculate in some more losses in your portfolio. Everything can, of course, reverse tomorrow, right? And the things can just go back up, but you know, in the short term, we might experience some more losses. Does that matter? No, I don't think so. It just means that we have to wait a little bit longer. And that is, of course, you know, the biggest reason why you buy quality juniors, right? That don't, what's the word? That don't, dilute you too much over time. Because if you have to wait, that's no problem, right? But if you have to wait while you get diluted, that's a very big problem. That is, of course, also the reason why people like dividend stories, right? Because then you get paid to wait, right? A lot of these bigger gold stocks pay dividends. So if you are in the position, if you are in a different position than me, right, where you think, well, we've probably seen the end of the immediate bull market in gold, which means that it's probably going to take a couple of years before we get back to the old highs, right? Then you might be wanting to look at some more dividend stories, right? At some bigger gold mines, because then you get paid some dividends to wait, and they won't dilute you, right? So there's a lot of things happening within this market, right? And there's a lot of decisions that you need to make. If you think that we are in a 2011 style market, you might want to look at some more dividends to get paid, to wait, to not have the dilution effect. But if you think that we are in some sort of a 2008 correction, right, you might want to look at developers. You might want to look at some exploration, right? Some more risk, because there's more potential that it goes up in the future. Very real decisions that have a very dramatic impact on your risk reward. And that is why you cannot wait in this market, right? Because waiting and forgetting about all of this stuff and forgetting about your portfolio and just going on with your life kind of means that you are not going to be paying attention to these bigger changes, right? But staying on top of it, being patient, knowing what you own, and understanding the risks that come with that are essential in this market. Anyway, I wanted to look at this bond yield as well, right? The US government bond. This is the 10-year yield. Why is this important? This is important because the US government is in a lot of debt. And the US government has to pay interest on that debt. And it is not so that the government just sets an interest rate, right? It has to buy and sell bonds in order to borrow money. and they have to pay interest on those bonds. So if the interest on the government bonds goes up, the interest payments of the US government go up as well. And eventually, unfortunately, if the same trajectory is going to continue, the US government is not going to be able to pay the interest on its debt in a couple of years, which might also take longer than we expect. So the movements in these bonds are very, very impactful, right, for the US government, but also for just households who borrow a lot of money. And I don't know why this is, but the American economy is fully based on credit. So this going up has a very dramatic impact on the economy and on the government. We've seen that these bonds, right, they've risen, they've consolidated, and now, right, and this is a very big moment, they have gone and broken out of this descending kind of structure that they were in. Who knows, you know? I think eventually, right? Eventually these rates are going to go up with all of the setbacks that come with that, with the economic consequences that come with that. But these rates are eventually going to go up. Let me just get to the monthly. Right, since the first peak in the bull market, right, in gold, the interest rates were 15% in the US. And ever since that, the rates have kind of slowly fell over time. Ever since the 1980s peak, right, that's when we defeated inflation, right, by 15% interest rates. That broke the back of inflation, and eventually rates kind of steadily dropped down, which in part made everything in everybody's lives more expensive, which for boomers, right, was extremely helpful because they were the generation that bought houses, that bought stocks, that bought businesses, real estate, everything in a falling interest rate environment. So if you buy a house, right, at a 10% interest rate, and the interest rate drops to 8, and then to 6, and then to 4, and then to 2, and eventually, right, in 2020 down to 0, that means that the value of that house is going up because people have the ability to borrow more money to buy that house. And that is kind of the problem that we are in right now, right? The interest rates have gotten up, but the prices of everything have not reflected that yet. Same has happened, right? Same theory goes for stocks, right? For businesses, for consumer goods, right? The interest rates kept falling over time, so people could borrow more money and put on more leverage to buy more stocks to prop up the market more, right? And right now we are in an environment where the interest rates are high, the inflation is high, and the prices are also high. So one of the two things has to change, right? Either the prices have to come down or the interest rates have to come down. But the interest rates can't go down because we have inflation. And that is kind of the problem that we are in right now. One way to solve that problem is to let prices come down because, you know, then people can buy houses again, then people can participate in the markets again. But unfortunately, that is not something that you would want if you are in power right now. Except, you know, people like Warren Buffett, who's been selling a lot of stock and hoarding a lot of cash for exactly that thing to happen. But we can see that the prices, right, or the yields on the bonds have kind of peaked out of this descending line. So interesting moment to see what is going to happen, right? Because if these prices of these bonds are going to go lower, which means that the yields are going to go up, that has real consequences. And if that eventually means, right, that the stock market is going to go down too, well, that has real consequences. for your portfolio, for your money, but also for the world at large, right? If that happens, then I might get drafted for a new world war, you know? Because unfortunately, every time the market drops, a war starts. And then all of a sudden, the market goes up again. So, ladies and gentlemen, if this market drops more than 20%, I'm gonna be at the front lines, you know, AK-47 in my hand, just against Russia or China or whoever the fuck they wanna start a war with. Real threat in my life, by the way. I don't really know how to deal with that, but we'll figure it out. Anyway, 10 to 2-year yield spread. Why is this important, right? This is the yield of the 10-year treasury minus the yield in the 2-year treasury. Why is that important? That is important because long-term interest rates should be higher than short-term interest rates. Why is that? That is because there's more risk that comes with borrowing for a longer time, right? If you come up to me, you tell me, hey, I need to borrow $100. I'm gonna give it back to you in a week. Sure, just give me back my $100 and give me $5 for the inconvenience that you cost me, and then we're even. But if somebody comes up to me and says, hey, can I borrow $100? I'm gonna pay you back in 10 years. Well, you know, if I really want my money back, right, that's a big risk because who knows what happens within 10 years. So I gotta want a little bit more interest on that to compensate for that risk. Now, that is represented in this chart, right? If this chart is high, so if these are high, that means that the longer yields are higher than the short-term yields. So people are getting more money for landing longer. That stimulates economic activity, right? But if this chart is lower, right, that means that the long-term rates are about as high as the short-term rates. And why would that be? That happens in an environment where people see a lot of risk. That happens in an environment where people don't want to lend money for a long time. And that happens in an environment where people think that the Federal Reserve is going to cut interest rates soon. Why is that? Because that increases the value of the bonds, right? And for a long time, there's been this 60-40 portfolio that people have been holding on to, where you have 60% stocks, 40% bonds, or whatever. Maybe they reverse it, but you know, who cares? And then the idea was, right, then you're kind of hedged against everything. Because on the one hand, you have your stock market portfolio for when things are going up. And on the other hand, you have your bonds for when things are going to shit. And then the bonds increase in value. But what happens, right, when the short-term rate is higher than the long-term rate? That means that the yield curve is inverted. And that happens when this line goes below this red line right here. This is the 0 line. If it goes below that, it's inverted. That means that people are willing to hold short-term debt at a higher interest rate as long-term debt. So that means that there's extreme amounts of risk in the system and that a lot of big money is moved towards short-term debt because they think that interest rates are going to drop or that the general equity market is going to drop and they want their money back quicker with a return. Every time after this yield curve inverts, right? We saw that in we saw that in 2000 till the year 2000, right? Every time this yield curve inverts, we have a recession that follows that. So you can see that here with these purple shaded boxes is a recession. It happened in 2000 and it happened in 2008. And these are very important moments, right? Because when you are going into a recession, this has a very big impact on not only your life, right? You might lose your job, your house might become less valuable, your stock portfolio might become less valuable, but it also has an impact on your investments, of course, right? I believe, right, that we have had a very big inversion between 2022 and 2024. And I believe that there is a recession coming soon. Unfortunately, right, the government likes to lie. Big surprise to everybody. As False Bottom Lifestyle just said, whilst there's been a had some really suspicious commentary about removing outliers in price movements when calculating inflation, of course the government is going to lie to you. You know, they're going to take 60% of your money and then they're going to turn around and give you the big middle finger and then lie to you about all their statistics. So the government doesn't tell you when a recession is happening. The government tells you when it has happened, right? When it's already passed. So when it's too late, they're going to tell you. This blue line right here in the middle is when the government officially announced the recession. And you can see that that is, you know, in the end stages of the actual recession itself. Now, this chart has a lot of implications on the price of gold and silver, and therefore the price of these mining stocks as well. I am extremely bullish on the price of gold, and I'm extremely bullish on all the stocks that I hold in my portfolio. But there's one big caveat in that, that I do have an exit condition for myself, and that is when I see the yield spread between the 10 and the 2-year spike upwards dramatically. Because if I see this yield spread move upwards in an extremely quick fashion, that is a very big indicator of, you know, a market crash. It happened, right, in 2008. It happened in the 2000s. And I got a video about this on my channel, and I talk about this about every single week. But there's a very big condition of mine. If this spikes upwards, this ratio, right, if we go and if we see something like this happening, right, I will step aside, I will sell a lot of my stocks, and then I will wait that out because I don't want to be part of a bigger market correction. Everybody has their own strategy in this market, so please don't look at this and copy my strategy. Please figure it out for your own, you know, but this is what I'm doing with my money. But seeing that the potential, that the rate of the 10-year yield kind of just broke out of that downward line, right, is kind of an indicator that that yield might go up, which is an indicator that this yield might also go up. So that's definitely something to keep in mind for the couple months coming. Another thing that I wanted to look at is Bitcoin real quick. You know, big head and shoulders building, shoulder, head, shoulder, kind of the neckline. If it breaks, it will go down lower. You know, we've seen Michael Saylor from MicroStrategy really sweating over the last couple weeks. That is something that I did see come by. He has this company MicroStrategy, or Strategy these days, where he buys Bitcoin, right? And the scheme there is that MicroStrategy had a premium to their Bitcoin holdings, so they could sell stock, get cash, and buy Bitcoin, essentially for them to increase their holding in Bitcoin, right? But that scheme only worked because their stock had a premium to the price of Bitcoin. Now, recently, right, that premium has disappeared, so they have a very big dividend obligation through their stretch equities that they've released. And they needed to pay that interest, right? But they couldn't sell stock in order to get cash. So what they did was sell some Bitcoin, right? And they sold a couple hundred Bitcoin, and that tanked the price a whole bunch. And then they came out in some press statements saying that they were in fact looking at selling more Bitcoin in order to get their dividend back on track. Unfortunately, that means that if MicroStrategy is going to sell a whole bunch of Bitcoin, right, this price is going to tank through the floor, because a big reason that this price is at this level to begin with is because you have one of the biggest buyers in the world consistently putting in a bid below this price, right? MicroStrategy. That's one of the biggest reasons that this price is even up here to begin with, right? Because you can say all the bullshit about the ETFs and shit like that, but all of those people that are in these ETFs, they're going to sell when the price goes down. That's just what it is. The only consistent big buyer in this market was MicroStrategy, and they are currently selling. So if you do hold Bitcoin, the game has just changed, you know? And it's a very risky thing to be in, I feel like. But I talked to Larry, you know, uh, Lepard, Lawrence Lepard, right? A couple of years ago, I helped Lawrence write this book, right? The Big Print, right? This is a book about money printing and his view on his portfolio management. I helped him with a couple edits in this book. He sent me a copy with a letter, whoa, which was really nice of him. And he's going to come on the show probably somewhere next month. I talked to him on Twitter a little bit, and he said that he was willing to come on the show. So what I want to hear from him, right? What I want to hear from him is why he is still in Bitcoin after Michael Saylor has sold or is selling, right? So that's going to be pretty interesting. If you guys are hyped for that, definitely keep checking the channel. But yeah, what else to look at, guys? Stocks have just gone up, you know. Looking crazy. When Saylor is forced to sell a big chunk of their Bitcoin holdings, I don't think Bitcoin will survive. I love the idea of Bitcoin, but now part of the same system it was supposed to challenge. I 100% completely agree. I like the technology, you know. I love the technology actually that you can encrypt something, right? And then there's in this digital world where you have AI and where you don't really know what is real and what is fake. I like the idea of like authentication, right? But whether Bitcoin is going to be, right, it's going to be around in a couple of years, who knows? Who knows? Bitcoin really still has to prove itself in a financial crisis, right? Because it's been made in what was it, 2008, and it really still has to prove itself in a financial downturn. So if we get into a recession, if we get into like a war, if we get into something like that, it still has to prove itself. And until then, I'm not touching it. But you know, let's say that it's that we got like a massive recession right now and Bitcoin is still holding up, I would give it some more thought, but let's get through a recession first, right? And then see afterwards. All right, guys. I don't really have all that much more to say right now. That's kind of what I wanted to yap about. I am going to be back next week with another stream, and then we are going to look at some gold and silver stocks in more detail. Partly because I hold a portfolio of about 15 stocks, and I've seen some pretty good news stories come out over the past couple weeks. So that is pretty good, right? I've been doing some things on my own, and then the companies that I own keep moving forward and they keep putting out good news. That's always a good thing. Let me just... Toby, is energy not the new gold? I think companies like could be big players, sodium iodide batteries. Just a thought. Well, if you are going to get into the battery plays, right, and the energy plays, the story is really about copper and silver. Because if you are looking at these new batteries that are out there, right, the solid state batteries, and Samsung has come out with these stories about batteries that charge really quickly within a very short period of time. They all use a lot of silver. And if you are talking about energy, then the story is really about copper, because a lot of our energy consumption is just going through a lot of copper wires, right? So if you are interested in energy stories, right, definitely just look at copper, right, as a commodity. I think that that will be very interesting. I haven't heard anything about these solid state batteries for a while, huh? They were all hyped up when silver got pretty expensive, but I haven't heard anything from them in a couple years, or in a couple years in a couple months. Let me just oh, let me just see if I can. Let me just see if I can get some up-to-date information about these solid-state batteries. Right, I can see here that boom. I can see here that Honda has a solid-state battery as well. So it's probably a couple companies that are working on this right now. But this is definitely a very big change in this silver market, right? Because when new battery technology is going to come out, and in the general quest for the electrification, you really need battery technology, right? You really need good battery technology. And if these solid state batteries become a thing, right, we really need a lot more silver supply, because these batteries hold a lot of silver. So that is definitely going to be very interesting. I believe that I heard somewhere, or I read somewhere, that if they put these solid state batteries into electric cars, that there would be a couple kilos of silver in every single electric car. And that would be a very big game changer, of course, in the supply demand kind of story. Oh, yeah, that's another thing that happened that I wanted to tell you about. Um, a viewer, right, of my channel has contacted me to talk about the numbers, right, the numbers of the Silver Institute, about the supply and demand of silver, and he had a couple very interesting things to say, and I kind of forgot about it, and now I remind myself about it. I should definitely get him on the channel for him to explain a couple things about the supply and demand of silver, especially now that a lot more companies are talking about these batteries, right? But yeah, US scientists develop ultra thin coating that could enable faster, safer solid state batteries. And I think that that coating, right, is. They don't talk about silver in this. Of profit, silver. Mm-mm. Well, anyway. Anyway, battery technology is definitely very interesting. I don't know how much silver is in these solid state batteries, but you know, if that is really a new technology that is coming up, then that is very interesting. All right, guys. I think my dinner is ready, and I'm going to go ahead and have a nice little dinner today. I'll be back next week with some more due diligence, right? Today was just going over the things that have happened in the last couple of weeks, right? Where are we right now in the bull market? 2008, 2011. What's the big differences? What to look for, what to look at. Next week, we are going to be back and we are going to be looking at some live due diligence of some gold and silver mining stocks. So if you are interested in that, definitely join next stream. We're going to go over some recent news, some new mining stocks, and all kinds of things like that. With that being said, I want to thank you guys for being here today, right? AJ Walsh, Simba, The False Bottom Lifestyle, A Costi, Toby MS. Thank you guys for joining. Everybody that is watching, right, without chatting, thank you so much for joining me today in this stream. Been away for 3 weeks, had a little bit of some paperwork that I was managing. That's all done now. Got the company set up. I'm just running on all cylinders, just going forward, grinding my ass off. Going to be back weekly to bring you guys some streams and to do some live due diligence. That sounds good to you? Hit that follow button or whatever, the subscribe button, things like that. Thank you so much. I'll see you guys next week. Same time, probably another day, probably on Friday, because I do like to have a weekend too. But yeah, we'll see. We'll see. We'll see. Either Friday or Saturday. We'll be back. All right, guys. Thank you so much. See you next week. Bye bye.